Bitcoin 1 year from now, I think is something around 250,000. The cycle of Bitcoin turns a little bit down early next year, so maybe Bitcoin gets to the 60s. 60s before 250.
Tom Lee begins by addressing Bitcoin's recent performance, noting its market capitalization has dropped below $2 trillion, settling at approximately $1.82 trillion. While this decline might worry some, Lee emphasizes that such corrections are normal in a bull market. He draws parallels with Bitcoin's 2017 bull run, describing similar periods of stagnation and consolidation before massive upward moves. For example, during early 2017, Bitcoin struggled to maintain momentum, dropping from $1,000 to $800 before embarking on its historic rally. Similarly, in 2023-2024, the market appears to be facing a comparable psychological hurdle at the $100,000 mark. Lee predicts that once Bitcoin breaks out of its current consolidation phase, it will likely embark on a significant upward trajectory. He foresees Bitcoin reaching prices between $250,000 and $1 million by the end of 2025, echoing the dramatic gains witnessed in prior cycles.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Part of the reason we have stayed constructive on Bitcoin is the price is following closely the prior halving cycles. The halving cycle, for your viewers, is when the block reward gets cut in half. That happened earlier this year. So there's a reduction in new supply. And the sweet spot of that price gain as supply is cut starts to happen towards the end of this year and then into next year. And I think that has supported why we expected Bitcoin to be 100,000. And over the next 12 months, I think something over 250,000 is possible, but maybe highly probable based on just following this price cycle. The second reason I think Bitcoin has maybe more upside than that is because the new administration has run on a pro-Bitcoin platform. And I think that the possibility of the U.S. not only legitimizing Bitcoin, but making it a strategic reserve asset, I think raises what would be the possible price scenarios for Bitcoin. Because if the U.S. government, as they intend, ultimately gets to 1 million Bitcoin, they'll be the largest holder of Bitcoin in the world. And they'd exert enormous positive influence on legitimizing Bitcoin. And maybe I would just add to that, it's almost like taking a playbook from MicroStrategy, because MicroStrategy has proven that using Bitcoin as a balance sheet asset has really created a lot of value for MicroStrategy shareholders. Bitcoin 1 year from now, I think is something around 250,000. The cycle of Bitcoin turns a little bit down early next year, so maybe Bitcoin gets to the 60s, 60s before 250. That they could look at Bitcoin, Ethereum, and Solana, because we put those largely in the same category as like sort of core cryptos.
Yeah.
We are also entering what I think is alt season. Next year is really when I think the crypto market could broaden, and this is where those who are really experts on crypto, and I know you run a crypto fund, actually are gonna have some alpha, because that is actually when many altcoins could do really well. I think that the stronger Bitcoin is, the stronger the ecosystem becomes. And so many of these utility tokens and things that are tokenizing really start to have a lot of expected value. But I don't follow this as closely. Sean Farrell is much closer to sort of how to play alt season. And of course, Skybridge. Historically, hedges for inflation have been land, like owning real estate, owning gold, which I think is still valid. But I think now there is hedges using crypto, because crypto is also hedging against dollar and currency debasement, which is on top of like inflation risk. So I think all of those are valid inflation hedges. Of course, if you are open to alternatives, even things like art and collectibles are pretty good inflation hedges as well. What we recommended to our clients are really 4 sets of trades. The first is AI related trades. The second is small caps, because the Fed is dovish and they're easing, and that's going to boost their small banks within small caps. The third is we've recommended financials and industrials because the Fed is easing. And the fourth is Bitcoin because a dovish Fed along with this halving cycle. So those are the 4 trades. With the new Trump administration, those 4 trades are also the same recommendation, because now you have a White House that wants the stock market to go up. So there's a Trump put now on the stock market, and now there's a Fed put, and that supports small caps, financials and industrials, and Bitcoin. And so, of course, the AI trade, I think, remains strong. It didn't need a Fed put or a Trump put. Those are the 4 things.
Reflecting on Bitcoin's journey over the years, Lee underscores the resilience of the network and its ability to overcome challenges. From the Mt. Gox collapse and Silk Road shutdown in 2013 to the SegWit debates and Bitcoin cash fork in 2017, each crisis has only strengthened Bitcoin's foundation and increased its credibility. Today, potential threats, such as BlackRock's involvement or fears of centralized control, pale in comparison to the existential challenges Bitcoin faced in its early years. Lee dismisses these concerns, arguing that institutions like BlackRock bring legitimacy and scale to the ecosystem, ultimately benefiting Bitcoin's adoption and price.
At least in the beginning, it makes sense to expect it, even if it hasn't been delivered. On taxes, as you know, a lot of folks have been writing that it'd be very difficult for the U.S. fiscally to actually extend or even expand the tax cuts. And I think the bond market's going to really ultimately decide that. And because if yields keep creeping up because of growing deficits, I think that it's going to be hard for the White House to accomplish that. I mean, the White House is watching the stock market. The stock market would come under a lot of pressure if yields keep going up. So that's, I would say, to me, even though that's a goal like tax cuts, I'm not sure that that's going to be achieved without some way to convince bond markets it's not, that someone will pay the bill. And maybe that's because maybe you need a crypto strategy before you can actually do that. We're in an earnings-driven cycle, aided by AI, also supported by this prime age workforce surge coming from millennials and then also Gen Z, because those 2 generations are larger than Gen X. So Gen X is the generation born between 1960 to 1980, roughly. And those folks are, just in the heart of the prime ages now, and now they're exiting, and now you have 2 huge generations behind it. So think of it as like a second wave driving further growth. S&P earnings next year are roughly 300 for, let's say, just sort of simple measures. And so that's why S&P 6,000 is just 20 times earnings, right? Which I don't think is that demanding. By 2030, we estimate S&P earnings could be 600 to 650. Okay, and I think multiples will be higher because of the larger share coming from AI and technology earnings, which naturally have higher PE multiples. And so if you just apply a 20 to 25 multiple, you're getting, 15,000. So I know it sounds like people say, well, 15,000 sounds crazy. And 2 years ago, it might have sounded crazy, even though that forecast was in place more than 2 years ago. That forecast has been in place probably for 5 or 6 years. But, now that we're at 6,000, we're that much closer to 15,000. It's not a quantum leap any longer. I think that markets are at, like a friction point right now, because we've had 2 really good back-to-back year gains. I mean, anyone holding at the start of 2023 is up nearly 50% since then. So I think for anyone looking forward, the risk reward next year is quite different. So I can really sympathize with someone raising cash like Warren Buffett. Part of his selling, he had been doing it throughout 2024, may have been in anticipation of potential changes in tax policy, like paying a capital gains tax increase. But that being said, if we didn't look at the level of improvement of stocks for the last 2 years, but just over the next 12 months looked at what lays ahead, I think someone can be optimistic, because we know the Fed is cutting interest rates, but at a time when the business cycle is still healthy. So in the 7 times the Fed did cut while we weren't in a recession, markets actually did really well over that period as cost of money falls. And the second is that I think some uncertainties have been cleared up. I think so much of the summer, our clients were sitting on cash and getting nervous, and you could see it in the VIX index because they didn't know who was going to be president. But now that election is behind us, and while I don't think anyone knows what policies are going to emerge, because there's a lot of radical policies being offered, including cutting government spending, et cetera, I think it's going to create opportunities for many companies. And I'd say that the way we would sort of look at that is we'd want to be looking at smaller cap stocks because they've really been held back the most. And the third thing I guess is constructive is as by the measures of like how people have deployed cash, it's still a pretty cautious market because margin debt hasn't risen for 5 months now. So that's not typically a sign of euphoria. It's usually a sign of exactly what you said, people getting cautious. And even like investor sentiment, like AAII actually has fallen away. So we're at not that level like where people are so bullish that you have to start to turn bearish.
Lee is highly optimistic about Bitcoin's future. He believes the network's increasing decentralization, robust infrastructure, and growing institutional interest position it for continued growth. As more participants join the ecosystem, the threats to Bitcoin diminish, reinforcing its status as a unique and unassailable financial asset. Lee concludes by reiterating his belief that Bitcoin is on track to achieve unprecedented highs in the coming years. He urges viewers to stay focused on the bigger picture, emphasizing that Bitcoin's long-term potential far outweighs short-term fluctuations.
Please like and subscribe my channel.